Hello, good morning. It's Wednesday the 3rd. I'm FX Plu and this is the Market Brief. So let's start with a slightly sympathetic view of the nasty banks, because they might have been tossed a bit of a hot potato with everything going on. When the Chancellor rolled out all the different support schemes, it really ramped up pressure for the banks to lend as quickly and simply as possible. But even with the government guarantees, risk concerns led to slow deployment and higher interest rates applied to the loans. Yes, they got a lot of bad press, and yes, the government reacted to guarantee 100% of some of the loans, but where the borrowing business fails, the bank still takes at least some of the hit, and this risk looks like it's set to ramp up too, as the time comes where the businesses must start increasing their contributions as the government support packages tail off. The banks are naturally concerned that business failure will skyrocket and they'll be left carrying the can. Even with the small victories like infection numbers falling and suggestions that the economy has bottomed out, there is still a long way to go. And of course, all that's before Brexit could deliver a real groan-worthy punchline at the end of this annus horribilis. The market is focused, of course, in the short term, and the sterling rally continues, just perhaps without much of a safety net as it climbs higher and higher. Yesterday we saw 125.75 against the dollar and 112.75 against the euro. Over in the US, tensions continued through Blackout Tuesday and still threaten to boil over, especially with Trump threatening to send in the troops. But global risk appetite remains pretty strong. Stock markets are performing well and commodity prices are rallying. But a pretty gloomy report was released yesterday, estimating that it may take up to a decade for the US to recover from the pandemic because the manufacturing base barely exists there anymore. Of course, that logic probably applies to most Western nations too. So how much do you think China stands to benefit from all of this? That's one for the conspiracy theorists to get their teeth into, no doubt. Over in the Eurozone, the main event this week is of course the ECB meeting tomorrow. We should spare a thought for Christine Lagarde there. Could she have started at a worse time? I mean, the European economy was already on its knees and sliding pretty quickly into recession, and that would have proved plenty of challenges for her when she took over the top job. But that was before the pandemic hit. Of course, the European Recovery Fund is still a complete mystery, causing plenty of rumours to spread, and none of them are any good. So expect Lagarde's press conference to have a little more interest than usual. But for now, though, the Euro rally continues, and yesterday we saw Euro dollar rise further to touch 111.95 on the day. Right, that's it from me. Have a wonderful day. I'll see you again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.